Today's session, all about the mindset to it. I'm going to speak for maybe the next 15 or 20 minutes. Feel free to use the chat box, use the Q&A box, and let me know what questions you have, challenges you're facing. These sessions, we do them each week. They are for all of you out there to help you in your business. So that being said, exercising the stress muscle is our first topic of the day. Based on the current market conditions, there's a lot of stressful scenarios going on in the multifamily space. Whether you're looking at new deals, bidding on deals, going through the PSA negotiation process, or trying to close deals, or even just operating deals. A couple of stressful things that we have been thinking about and looking at is in a couple examples. One is from a offering process as well as purchase and sale agreement process. A lot of people out there from the sell side try to compress the timeline to close, whether that is doing due diligence, getting the property closed, and having some sort of extension. The kind of industry standard right now is 30-day due diligence, 30 days after DD to close on the property, and having a 30-day extension if you need it. We are holding very firm to those terms. And, a lot of times it can be stressful if the seller or the broker is trying to beat you up to shorten those timelines, doing like a 21-day due diligence with a 21-day closing period and no extension. It's too aggressive right now in the marketplace. There are a lot of pieces when you're closing a deal that are outside of your control, whether it's a surveyor updating a survey. The title companies are all backed up. Property inspectors are backed up. Appraisals are taking longer than normal. And so getting ahead of that kind of stressful time crunch where you might have a hard money deposit, you might have a accelerated timeline to close, it is an area where you need to be prepared to plan ahead, really is the main thing, so you're not in a huge stress situation and freaking out that you need to close a deal within a certain amount of time. And so our approach, again, kind of going to the industry standard terms, having a 30-day due diligence period, 30 days to close after that, and one 30-day extension is a way to avoid some stressful situations. In the past, we have been under the gun a little bit more with very stringent timelines for closing, and it can be very stressful, and you really have to rely on having a great team to get those items done. Another challenge that we're seeing that can be stressful, whether you're evaluating deals or under contract and the debt market is changing for you, that is definitely a stressful time period. So if you recently got a deal under contract in the last 30, 45, 60 days, the debt market has changed pretty dramatically, to the point where you may need to have a conversation with the seller about renegotiating the purchase price because your debt costs went up and your returns are no longer being achieved based on how you underwrote and evaluated the deal, a month or two ago. And so that is a very stressful and challenging time to have that conversation. But it's one that, you definitely need to overcome the worry or the stress. The worst thing, I always kind of think about it from a mindset perspective, the worst thing someone can do is say no to it. And you just have to figure out another way to go about it. And so, from a mindset perspective, I think working that muscle, getting uncomfortable, overcoming, having that conversation, it gets easier with time, on whatever it may be, whether you're trying to renegotiate terms on a debt matrix or working with an existing lender to extend the loan that you have in place, or refinancing a project, or looking at increasing rents at a property. Having those difficult conversations is something you have to do as the general partner, as the entrepreneur business owner, because it's going to get easier with time. Your level of stress or comfort with stressful situations will grow. And so, if you are very worried about a timeline to close a project and you get it done, you will build from that. And so the mindset is really overcoming your internal fears or worries about the worst case scenario, and getting the conversation to occur, because you'll grow and be stronger after the fact, whether it's a good outcome or you are in the status quo. The answer is no back from whatever discussion you're having. You're going to be in a better position after that fact. And so, um, I have kind of come to learn the stress muscle from EMD deposits. So one example, if you are getting a deal under contract and you're putting up, $50,000 of an earnest money deposit, that's a sizable chunk of money to be putting on a deal. And you may be very stressed about it. However, if you do a second deal and your deposit is, 250,000, that's 5 times more than your previous deposit, but you gain that comfortability with it. And so, multifamily investing is not always an easy business to be in. You're not going to have great days every single day of the week, but having the stress muscle, exercising it, and getting uncomfortable with being uncomfortable, or excuse me, getting comfortable with stressful scenarios is going to be a huge component to the business, because you will encounter challenging times. You will encounter um, obstacles that you just have to figure out a solution to. And so, from a way to overcome that as well, not only doing it yourself and getting through it, having someone in your network, whether it's a mentor, a group, the multifamily investor nation, to interact on the forums, ask your questions. Someone has been through anything you may be going through in a multifamily scenario, right? We are not the trailblazers doing this for the first time. And so that's something I always try to resonate and think through when I'm in a challenging situation, is just that, you know, hey, I'm not in this alone. I have a team of people around me. Someone else has been through this before. How do I find a resource to help get me through this position? And so, if you're ever having a really hard time with some challenge that's going on, post it in the forums, bring it to a webinar. There's plenty of people who have come before us who have encountered a very similar challenge. They took some certain approach to it, and people are always willing to share and help. And so that's a great way to kind of calm your nerves. If you get an email or a text message or a phone call with really bad news and it gets you upset or stressed, take a minute, understand what's going on, why you're upset, and then think about that other people have gone through it before and that there is a solution to the problem. It is not the end of the world. Um, there is a worst case scenario, and you can measure that very easily. Um, and the outcome is not as bad as your mind is making it think. And so um, it's much easier said than done. I think it comes with time and practice. So if you're new to the business, um, understand that you're going to have a lot more challenging times than a group like us, as we've experienced things multiple times and kind of can overcome some of the um, challenges a little bit faster or easier than a person brand new to the business who's experiencing something for the first time. It's always a much harder encounter at that point. So um, let me pause and check the chat box, check the Q&A box. Great question in here from Rob as far as the debt markets. Use the Q&A box, use the chat box if you have questions, and I'm going to address Rob's question here. As far as the debt markets go, um, things have kind of gone a little wild. The With the Fed raising rates, spreads and treasuries being increased, indexes being increased as well, whether it's LIBOR or SOFR, rates are going up. And so, when I look at our existing portfolio, um, it is a stressful time. However, you can do the math to figure out your worst case scenario. So if you have fixed rate debt, guess what? You're in a really great position. You don't have to worry about rising rates or treasuries or the Fed or anything like that. So that's a very um, straightforward piece to figure out. On the flip side to that, if you have floating rate debt, it's really important. You need to go through an analysis of each property from a worst case scenario perspective and evaluate what your cash flows look like or your revenues look like, um, taking into account what the current interest rate is today for that floating debt, and then also what your worst case scenario rate could be. On all of the multifamily deals we purchase rate caps, which cap a maximum um, interest rate that we would pay on our debt service. And so, again, it's a very easy process, but it's one you have to do to understand your worst case scenario. So if you have a deal in your portfolio right now with floating rate debt, you want to go through and look at, okay, what is my debt service payment today? What is my debt service payment worst case scenario? And am I cash flow positive? Um, and how much cash flow am I generating above and beyond that number in order to either save up and build reserves for the property or pay out distributions. So that's a exercise that we do internally. The second piece, if you're evaluating new deals, again, you need to underwrite two different ways. One, with fixed rate debt, which is going to be low leverage, typically, in the 40 to 60% range, based on how deals are trading at today. But always have a debt broker help you size up the deal, to see what your options are. They should be able to give you a quick matrix of, here's fixed rate options, here's floating rate options, and you need to build in, if you're doing a floating rate loan, what sort of interest rate cap you're going to get, to protect yourself from that rising rates that we are expected to see continue through the end of this year. So it's definitely a stressful environment, but one that you can really methodically think through. And you should only be doing deals that fit your criteria and your return. So whether you're paying 2% on your interest rate or 10% on your interest rate, if the deal hits the returns and it achieves the reason for your investment, then it's a sound investment to make if you believe in it. So it's just about underwriting correctly, being conservative in your assumptions, and making sure that you're conservative from a debt perspective, because things are changing fairly quickly day by day in that space. I want to clarify one of the questions that came in here. If you get a floating rate loan, I would encourage you to purchase a rate cap to mitigate any exposure, so you are capped at a maximum interest rate that you would pay. We do that for all of the multifamily deals that we've done floating rate debt on. So if that's a new term for you, check out some previous videos where we talk more in depth about debt, fixed and floating, as well as rate caps for floating rate. Typically, if you're buying a $5 million deal plus, most lenders will require you as the borrower to purchase a rate cap, which again will mitigate your exposure to rising rates and cap the maximum interest rate that you would pay on a deal. Right. Any more questions? Again, use that Q&A box, use the chat box. I talked through, the stressful pieces, the ways to get through it, how to, take those challenges head on. You're going to grow from it on the other side, no matter what the outcome is. Evaluate the worst case scenario. Your mind always makes the worst case scenario worse than it actually is. So I like to do that on paper, or, think through it with a business partner, think through it with a mentor. The worst case scenario is not as bad as your mind will make it be initially. And then having that mentor, having a group like the Multifamily Investor Nation, where if you are facing something really hard, just remember, you're not the first person to go through it. There's been plenty of multifamily challenges that a lot of people before us have gone through, and there's people out there who can help. So tracking down the right resources to help you will go a long way in overcoming some of the challenges. That being said, I will wrap up for today's webinar. Join us next week, Tuesday. We will have our typical weekly webinar. If there's any more questions, I'm happy to stay on and chat through any challenges that people are facing. It looks like we've got a couple coming in here. Very good. Very good. Got it. So mindset around dealing with your partners through the hold period. I think the mindset of working with your business partners is very important. And the best way I have learned how to deal with that is making sure the alignment of interests are there from the get-go, and that the vision is the same. And so, an extreme example, let's say partner one is very well off financially and is in the business because they want to have long-term income in 10 years. And you have partner two who just quit their job, is making no money, and really needs each deal to produce extra monthly cash flow so they can buy food and feed their family. You have two very different people where the vision of partner two is really built around short-term success and monthly income, as opposed to partner one doesn't care about monthly income at all and just cares about the long-term success of the deal. You're going to probably have challenges there. And so having partners that have the same vision and goals as you is going to make um, minimize any challenges that you face, because you're going to be aligned with the goal of the project. And so, when we evaluate deals, we are not looking at making fees from the deal. It's really long-term success of that deal, and that's the alignment of interest that we have, that keeps us going and pushing in the same direction. So evaluate that from the beginning and check in on that on a regular basis to make sure you're aligned there. Okay, that being said, I think I've answered all of the questions that we had for today. Again, join us next week, Tuesday, for the webinar, 11 a.m. Eastern Standard Time. And we hope to see you at the summit in Charlotte in person starting Thursday this week. So if you have not bought your ticket, go out and do so. And we will see you in Charlotte. Looking forward to it.